Hey everyone, we hope you're having a great 2023 so far.
Thanks for taking a few minutes to view our Outlook 2023. During this presentation, we're going to be talking about the economy, stocks, bonds, and policy.
We hope you enjoy.
The theme of our 2023 Outlook is about finding balance. If 2022 was about recognizing and addressing imbalances in the economy, we believe 2023 will be about setting ourselves up for what comes next as the economy and markets find their way back to steadier ground. There is without a doubt a lot of uncertainty around what's going to happen with the economy in 2023 and beyond, and there are many different factors we could discuss. But what we continue to focus on is the path of inflation. The good news, we believe inflation has peaked. Last June, CPI climbed to a post-pandemic peak of 9.1%. We've now seen 6 consecutive months of declining consumer inflation, given Thursday's CPI reading of 6.5%. This is serious progress and takes pressure off of the Federal Reserve to continue raising interest rates. Stocks are rarely down 2 years in a row. We believe there's a higher probability of positive stock market performance in 2023. If stocks are going to go higher, the Fed's rate hiking campaign will likely be a key component. The timing of the last rate hike of this cycle is uncertain and won't be clear for a while. But our view is that the Fed will pause or moderate during 2023 amid an improving inflation outlook and loosening job market. Stocks have tended to produce solid gains after hiking cycles end, including a 10% average gain 1 year later. Through many economic downturns, recessions, and geopolitical crises over many decades, the stock market has always recovered. Those patient investors who were able to take advantage of those declines have usually been rewarded nicely. Following down years, the S&P 500 has risen an average of 15%, with positive returns in 15 out of 18 years.
Overall, we're pretty optimistic on the bond market this year, which is coming off one of its worst years on record. With rates moving higher last year, we feel we are now better positioned going forward since bonds are paying out higher yields. There are a range of scenarios we think could play out this year. However, given our view that the U.S. economy will have only slight growth, we think the 10-year Treasury yield could end the year around 3.5%. If the economy goes into recession and has a hard landing, we believe the 10-year could fall below 3%. And if inflation continues and we have stagflation, the 10-year could finish the year in the 4.75% range. The 2022 midterm election was closer than many expected, but in the end, voters chose to rebalance the power in Washington, D.C., and the Republicans gained enough seats to win a narrow majority in the House. Despite Republicans' narrow House majority, their victory in the House significantly shifts the balance of power, since only legislation with broad bipartisan support will get passed. Regardless who is in office, stocks have always gained the year after the midterms, with an average gain of 14.7%. As illustrated on this slide, historically, the third year of the presidential cycle has been the strongest, and a weak 2022 may help set up this pattern again. The other major takeaway from the election is we now have a mixed government, with Democrats holding the Oval Office and a majority in the Senate, while Republicans have a majority in the House. Markets have tended to favor mixed government, since neither party is able to give into its worst excesses, and any legislation that does get passed is subject to compromise. It may also be that the government that governs the best is sometimes the one that governs the least, and mixed government has a tendency to create gridlock. Thanks again for watching. Everyone here at Platania Financial wishes you a terrific 2023.
If you have any questions at all, please don't hesitate to reach out to us. Thanks everyone and take care.
Please read these important disclosures.